Hey everybody, the last stream kind of like was blurring up, so I had to just like X out of that one and then restart this one. So I hope you're all having a good day. Like this is like, another live stream and I'm just like getting the hang of this, so like please super bear with me. Like I want to make sure that it's actually working fine and everything, that it's not buffering. I actually don't know if it's buffering or not, but I sure hope not. But anyways, like let's get into it. Like I'm looking at myself right now. It kind of looks like it's buffering, but I really hope it's not buffering because that would be kind of sucky. But anyways, like let's get into it. So it's gonna be a quick live stream today, just in case like things are like buffering and stuff like that. But like let's get into it. So we have first piece of news today is Bitcoin is about to see a big halving event. Here's what that means and why it matters. So past halving events have all resulted in huge price increases for the cryptocurrency. So we've seen like every previous halving event, Bitcoin has had like 3 halving events already. So this would be like the fourth one. So every single other halving event, let's just make sure like how many. Let's see, how many halvings has Bitcoin had? First Bitcoin halving was in 2012. And then the third Bitcoin halving was in 2020. The second was in 2016. Fourth Bitcoin halving is April 19th. Okay, so we're in the fourth Bitcoin halving, as I was saying. And so this is a big deal because every single halving event, Bitcoin has gone up tremendously because this is simple supply and demand. It's simple economics. It's simple like, like Bitcoin's going to go up because there's just less Bitcoin in the market. So that's what's happening now. And yes, let's see. So give me a second. Give me 1 second. So okay, so anyway, so like back to the video. So let's see. So Bitcoin has been having a terrific run this year. In just 2 months, its price has soared to more than $62,000, putting it in striking distance from its all-time high of about $69,000. Its rally this year is partly due to the U.S. Securities and Exchange Commission approving spot Bitcoin ETFs in January. So these exchange-traded funds tied to the price of Bitcoin allowed investors to enter the Bitcoin game without the risk of directly buying the still controversial cryptocurrency. So they're basically buying Bitcoin without buying Bitcoin, which means that there's less Bitcoin to go around because you still have to buy the Bitcoin. Somebody's gonna have to buy the physical Bitcoin, which means there's less actual Bitcoin for other people to have. More than $6 billion have entered the market since spot Bitcoin ETFs began trading in the US this year. The largest one, Grayscale Bitcoin Trust, rose 48% since January. And that's not all. An upcoming technical event known as Halving is set to keep Bitcoin surging even further in the coming months. So JP Morgan is actually predicting that Bitcoin is going to go back to 42,000 after the halving. We don't know. We don't know what's going to happen, but we do know right now that there's so much money in the market right now because Bitcoin has started going up because the halving is coming in a month. The halving is going to be coming in a month times from now. So, it might be a sell the news, buy the rumor type of thing. But in April, the reward miners get from mining new Bitcoins will be cut in half from 6.25 Bitcoin to 3.125. This happens every 4 years and will continue until all 21 million Bitcoins are mined. Halving was written into Bitcoin's code from the beginning to ensure scarcity and safeguard from inflation. Previous halving events coincided with huge price increases for Bitcoin. Here's everything you need to know about the upcoming halving event. So what is Bitcoin? So this is going to be like a little educational for those of you who already know what Bitcoin is. You can just like skip ahead. But for those who just want to be reminded or who just want to have like a general knowledge again, like a re-education, let's just read along. What is Bitcoin? Let's start with Bitcoin 101. Bitcoin is the first cryptocurrency created in 2009. It is a digital, decentralized currency that is not associated with any government or financial institution. To ensure its security and protect against fraud, Bitcoin uses a technology called blockchain to track transactions. The blockchain works like a ledger in which every Bitcoin transaction is stored in what is called a block. The authenticity of transactions stored in the block are verified by complex math problems that require computer power to be solved. Once the problems are solved, the block gets added to the end of the chain. So then how are new Bitcoins mined? Let's find out. New Bitcoins are added to circulation every time a block is added to the chain. Individuals or businesses known as miners compete with each other to solve these math problems. They are currently rewarded 6.25 Bitcoins worth about $388,000 for their efforts. So what is halving? Halving refers to a technical event that occurs about every 4 years or so as part of Bitcoin's code. After every 200,000, 10,000 Bitcoins are added to the chain, the mining reward is cut in half. This was done to slow down the pace at which supply of Bitcoin can be added to circulation. The number of Bitcoins that will ever be created is kept at 21 million as a way to mimic finite resources like gold. The next halving event is expected to take place this April, when the mining reward is set to be cut to 3.125 Bitcoin. So this is a big deal. Like, economics is in everything. And as we know, that it's very important that people pay attention to economics, because economics will let us know that supply and demand holds true for everything. So obviously, since the supply of Bitcoin goes down, demand goes up. And I know that there's a temptation to think that, oh, like, everybody knows this, so it must not work anymore. No, it still works. It always works. That's why it's a law, like the law of supply and demand. So it always works, and for the foreseeable future, it will continue to work. So that's the Bitcoin halving news. So let's move on. New ruling in SEC's Coinbase insider trading lawsuit comes as a blow to the crypto industry as judge finds secondary token sales were securities. Wow, what does this mean? So the new ruling in SEC's Coinbase insider trading lawsuit comes as a blow to the crypto industry as judge finds secondary token sales were securities. So what does this mean? As the legal debate continues over whether sales of cryptocurrencies constitute securities, all eyes have been on a court case involving a Coinbase employee sharing insider information with his brother and a friend. Wow, why would he do this? Why would he risk his job like this? It was not worth it. While the main defendant, former Coinbase employee Ishan Wahi, and his brother have reached settlements. You know what those settlements mean? The settlements means that they paid back all profits that they earned, that they got from trading cryptocurrency. While the main defendant, Coinbase, have reached settlements with both the Department of Justice and the Securities and Exchange Commissions. The friend Samir Ramani remains at large here because he's like, I'm not giving anything back. I don't know what they're talking about. On Friday, a federal judge in the Western District Court of Washington issued a ruling in the case against Ramani. While he was absent. The ruling, which agreed in part to the SEC's request for default judgment, can have serious implications for both Ramani and the broader crypto industry. Oh, wow. He ran and there's a default judgment against him? Crazy. In the decision, Judge Tana Lin ruled that the case fell under the SEC's jurisdiction because the crypto assets issues were securities, even though they were traded on Coinbase, a secondary market. As courts grapple with the question of when crypto assets are securities, the decision is the strongest decision yet by a federal judge to support Chair Gary Gensler's argument that the vast majority of the industry's activity falls under its remit. Gary Gensler used to teach Bitcoin, and he used to be for Bitcoin. Now he's against it, obviously, because he's only as loyal as much as he can afford to be, and he's chosen power. He's chosen power over, supporting Bitcoin. Since the rise of cryptocurrencies like Bitcoin and Ether, regulators have wrestled with how to classify digital assets should they fall under the category of securities like bonds and stocks or commodities like gold and wheat. Currently, the only cryptocurrency with regulatory clarity is Bitcoin, which the Commodities Futures Trading Commission has declared to be a commodity in 2015. Other assets have remained in a gray zone. As a result, when exchanges like Coinbase offer cryptocurrencies for trading, they have operated under legal risk despite declaring their belief that certain cryptocurrencies should not be classified as securities. Starting with SEC Chair Jay Clinton and continuing under Gensler, the SEC has pursued a campaign of enforcement against actions against crypto firms, arguing the firms are issuing or selling unregistered securities. With high-profile cases against companies like Ripple, Coinbase, and Binance, the SEC has sought to expand its jurisdiction over the vast majority of crypto assets, taking advantage of a lack of legislative movement in Congress. Yeah, but the thing is that the crypto people have money too. So now they have money to fight back, which is a big deal. So this is a huge deal. So federal judges in the various cases have so far taken different stances on the securities question, adding to the uncertainty. In July, Judge Annalisa Torres in the Southern District of New York sent shockwaves to the industry when she issued a ruling on the long-awaited Ripple case, arguing that the direct sales of its XRP token to institutional investors like hedge funds constituted unregistered securities.